Hello everyone, I am William. Welcome to this channel and thank you for joining me here. Before I start, please feel free to subscribe to this channel and switch on the notification function so that you won't miss out any of the newly uploaded e-learning videos in the near future. Today we're diving into a critical but often overlooked aspect of professional trading and portfolio management, the option trading audit. Whether you're an active retail trader, a portfolio manager, or a compliance officer, understanding and implementing a robust audit process is what separates a well-oiled strategy from a ticking time bomb. Let's start with a fundamental truth. Options are complex instruments. They involve multiple legs, decaying time value, volatile Greeks, and intricate tax implications. A simple glance at your P&L doesn't tell the whole story. Mistakes in entry, assignment, expiration, or rollover are not a matter of if, but when. So, what is an option trading audit? It's not just a tax season chore. It is a systematic, regular review of all your option-related activity. Its purpose is threefold. First, accuracy. To ensure every trade, assignment, and expiration is recorded correctly in your brokerage statements and accounting systems. Second, compliance. To verify adherence to internal risk limits, regulatory rules, and tax guidelines. And third, strategy integrity. To confirm your actual trading aligns with your intended strategy and to identify leaks in your performance. In essence, an audit is your diagnostic tool. It's how you move from saying, "I think my delta is hedged," to knowing it is. From hoping your tax lot accounting is optimal to verifying it. Today, we'll build a framework you can use. We'll break it down into the key pillars of an audit, the common red flags to hunt for, and the practical steps to implement this process. Let's begin. Any effective option trading audit is built on 4 core pillars. Think of these as your checklist. Pillar 1, trade entry and booking reconciliation. This is the foundation. You must compare your trade tickets, what you intended to do, with your brokerage confirmations and monthly statements. This isn't just about price. Check for correct symbol and expiration. A simple typo can turn a conservative trade into a speculative nightmare. Option type, call versus put. It sounds obvious, but errors happen. Strike price. Was your limit order filled at the correct strike? Quantity and leg accuracy. For multi-leg strategies like spreads, iron condors, or butterflies, ensure every leg was executed. A legged spread where one leg fails creates undefined, enormous risk. Now, we look at your current portfolio. Your trading platform shows you Greeks and risk metrics, but can you trust them? An audit involves spot checking. Recalculate key Greeks. For a sample of positions, manually calculate or use a separate tool to verify delta, gamma, and theta. A large discrepancy could point to a booking error. Verify margin requirements. Does your broker's margin requirement for a complex position align with your own calculation? A surprise margin call often stems from a misunderstanding of how a position is being evaluated. Check exercise and assignment logs. Review any assignments or exercises. Were they intentional? Were the resulting stock positions correctly added or removed from your portfolio? Pillar 3, expiration and corporate action review. This is where many silent errors occur. Expired options. Scrutinize the week after expiration. Did out-of-the-money options properly expire worthless? Did in-the-money options exercise correctly? For cash-settled options like SPX, ensure the cash flow is accurate. Dividend risk. For stock options, you must audit around ex-dividend dates. Were there any unexpected early assignments of deep-in-the-money calls? This is a major source of P&L variance. Splits and mergers. If you held options through a corporate action, verify the adjustment was made correctly. The new strike prices and contract multipliers can be confusing. Pillar 4, tax lot and P&L accounting. This is crucial for accurate performance reporting and tax filing. Cost basis tracking. When you close part of a multi-leg strategy, how is the cost basis allocated? FIFO, specific identification. Ensure your accounting method is applied consistently. Wash sale compliance, the bane of every active trader. An audit must flag potential wash sales, especially challenging with options, as the rules apply to substantially identical stock and options. Look for trades 30 days before or after a loss. P and L reconciliation. Can you trace your end-of-month P and L back to the sum of your closed trades, assignments, and mark-to-market changes? This grand reconciliation is the ultimate test of your data integrity. Knowing what to look for is half the battle. Here are the most common red flags that should trigger a deeper investigation during your audit. Red flag 1. Unexplained cash balances. Your cash balance is the heartbeat of your account. A sudden, unexplained influx or drop in cash is often the first sign of an error, a missed assignment, an incorrect dividend, or a fee. Red flag 2. Mismatched Greeks. If your portfolio delta is suddenly highly positive or negative when your strategy is designed to be neutral, you have a problem. A leg might be missing, or a stock position from an assignment might not be accounted for. Red flag 3. The phantom position. You think you closed a strangle, but one leg, often a FAR OTM option, is still sitting in your account decaying to zero. It creates negligible risk, but muddies your position overview. Red flag 4. The wash sale chain. You see a loss on a trade, but your taxable income doesn't reflect it. You've likely triggered a wash sale, where the loss is disallowed and added to the cost basis of a replacement position. Unchecked, this can create a complex chain that defers taxes but creates accounting nightmares. Red flag 5. Inconsistent benchmarking. Your strategy aims for a 15% annual return with low drawdowns. Your audit isn't just about trades, it's about outcomes. Is your actual volatility in line with your target? Are your commissions and slippage eating away more than you modeled? These are performance leaks an audit must uncover. You don't need a team of forensic accountants. You need a system. First, frequency. For active traders, a monthly check is essential. Align it with your brokerage statement cycle. A more comprehensive quarterly deep dive is also wise. Second, documentation. Create an audit checklist based on the 4 pillars we discussed. Use a simple spreadsheet or document. Note the date, the items checked, any discrepancies found, and the resolution. This creates an invaluable paper trail. Third, leverage technology. Use portfolio accounting software with broker AP, iFeeds to automatically import and reconcile trades. Consider specialized trade journaling platforms that track options, specific metrics, and can help flag wash sales. Even a simple practice, maintain a separate manual trade log where you record your intention for every trade at the time of entry. This is your source of truth to compare against broker data. Fourth, the human element. Designate a person responsible. If you trade solo, it's you. Block time on your calendar. Treat it as a non-negotiable operational task, not an afterthought. Let's bring this home. Option trading is a game of probabilities, precision, and managing complexity. An audit is your quality control process. It transforms uncertainty into confidence. Your 3 key takeaways today. 1. An audit is not about finding fraud. It's about finding errors and misalignments before they become costly. 2. Build your process on the 4 pillars: trade reconciliation, risk verification, expiration review, and tax/P&L accounting. 3. Make it regular and systematic. Use a checklist and leverage technology to reduce the manual burden. In the world of options, what you don't know can hurt you. A disciplined audit process gives you the clarity to know exactly where you stand, ensures your strategy is executed as planned, and protects your capital from simple, preventable mistakes. It is the ultimate practice of disciplined stewardship over your trades. Thank you for your time and attention. If you found this e-learning is useful, please feel free to subscribe to this channel and switch on the notification function so that you won't miss out any of the e-learning videos in future. Thanks again and have a great day ahead.